Hi, everybody. This is Peter Schiff. It is Friday, May 4th, 2012. It was Jobs Friday today. The government released the non-farm payroll numbers for the month of April, and it was a disappointment all around. More evidence that the supposed recovery is fading. They were looking for about 160,000 new jobs in April. Instead, we only created 115,000 new jobs. But I expect the president to focus on the small downtick in the unemployment rate, which went from 8.2 down to 8.1. So according to the narrative you'll probably hear on the evening news, the Obama administration is going to say that their policies are working, that the unemployment rate continues to fall. Well, here's the ugly truth. The reason that the unemployment rate is down is not because the unemployed found jobs. After all, we barely created any of those. No, what actually happened is that the unemployed left the labor force, and so therefore they are no longer technically counted as being unemployed. In fact, the labor force participation rate dropped to 63.6 from 63.8, which meant that better than 300,000 Americans left the labor force. In fact, 3 times as many Americans left the labor force as found jobs. Now, why did all these Americans leave the labor force? Is it because they're so rich that they decided they didn't have to work anymore? I doubt that. I think the truth is they were so discouraged by the lack of employment opportunities that they took themselves out of the game. You know, they're on the bench now. Maybe they decided to file some disability claim. You know, I've read that disability claims have skyrocketed since the recession began, and now a lot of people are living off of disability through the government. Now, are they really disabled? I doubt it. I think, it's not a coincidence that all these disability claims happen to hit at the time where the jobs are disappearing. I think people figured, look, I can't find a job, so I might as well pretend I'm disabled. And I think you've got a lot of that going on. Some people are just maybe retiring, not because, as I said, they're rich. It's just because there's no point in looking for work, so maybe they'll go on Social Security a little earlier than they thought. Who knows? Maybe some people are deciding to go to school, which, of course, current graduates already can't find jobs with all their debt. But some people might be going back to school to try to get an advanced degree, thinking maybe that's going to help. Well, it's not. Think about the impact on the economy from this shrinking labor force. Because people who leave the labor force, not only are they no longer contributing their labor towards growing the economy, but they're no longer part of the tax base, which means they're not paying taxes, which means revenues decline, which means the budget deficit gets even worse. And of course, if they leave the workforce and the tax base to draw down benefits for unemployment, disability, Social Security, they're not only no longer taxpayers, they're tax takers. So this only worsens the underlying imbalances at the federal budget. But that's not the only problem with this employment report. We created 115,000 jobs, but about 10% of those jobs were in manufacturing. That's not enough. In fact, the number of manufacturing jobs we created, I think it was 16,000 to be precise, was a 5-month low. Pretty soon we're going to be shedding manufacturing jobs again. Those are the kind of jobs we need to create, and not 16,000 a month, 160,000 a month, maybe more, every month of every year. You see, the jobs that we created were more service sector jobs: healthcare, education, retail, financial services. We don't need more of those kind of jobs. We can't afford those jobs anymore. Too many people in our country are working in those bloated sectors. Not enough people are working in goods production. That's why we have this enormous $50 billion plus hole in our trade deficit every single month, because not enough Americans are employed productively. And why is that? It's because the government is in the way. The government refuses to allow this economy to restructure along the lines that would create lasting economic growth and provide the type of jobs that we need. These jobs we have are stimulus-related jobs. They're a function of spending borrowed money. And when the stimulus wears off, these jobs are going to disappear along with the phony recovery that it helped create. Now, the stock market didn't react very well to this news. I think initially there was a sharp rally right after the worse than expected news came out. because the knee-jerk reaction was, oh, worse news, maybe we'll get more QE. Maybe this is going to give us QE3. But then I guess there was a second thought. Maybe people thought that, the news is bad, but it's not that bad. So maybe it's the worst possible situation where the economic news is bad enough to hurt corporate earnings, but not bad enough to get the Fed back in the game with QE3. So the stock market dropped. Let's see, the Dow was down almost 170 points. The NASDAQ was down almost 70 points. Now, the dollar should have weakened on this news, on weaker economic data, but given the problems overshadowing the dollar in Europe, the dollar initially shrugged off its early morning weakness and closed higher on the day. I think the relative strength or lack of weakness in the dollar is what kept the gold market from recouping the 20 bucks it lost yesterday. I think gold was up maybe $7 or $8 today. Gold stocks barely got off the ground. They were down new 52-week lows again on Thursday. In fact, gold stocks were down 4%, even though gold was only off 1% that day. I think in the last couple of months, even though the gold price is basically unchanged, gold stocks are down as a group by better than 20%. In fact, I think now the problem is that the weakness in the stocks is hurting the metal itself. I think maybe some of the gold traders are looking at stock market weakness or gold stock weakness and thinking that this is a divergence and it is forecasting a big drop in the price of gold. Now, I agree that the weakness in gold stocks means that gold traders, or the people who trade gold stocks, are probably looking for the gold price to fall. I just think they're wrong. I think it's a great contrarian indicator, and I'm not sure exactly when these gold stocks are going to bottom. But I think when they do, I think the rise is going to be spectacular. And I think people should be taking advantage of that to the extent that they are suitable for those types of investments. Of course, this slowdown in job creation to me is showing that this artificial stimulus high is wearing off. Of course, that is prompting the Keynesian crowd, led by people like Paul Krugman, to say that this is proof that we need even more stimulus. Krugman thinks another $2 trillion or so ought to do the trick, although where this money is going to come from, maybe Krugman hasn't figured that out, or he just thinks the Fed can print it, and it's not going to matter. Another justification that guys like Krugman give for wanting more stimulus is they look at Europe and they look at countries that are going the austerity route, and they see that right now the economic growth numbers and the employment numbers appear to be worse over there than they are over here, and that's offered as proof that the austerity doesn't work and that stimulus is what we need. Well, here's the problem, and maybe this is something that a lot of people on the stimulus side don't understand. It's about short-term pain for long-term gain. You see, the reason that austerity works is because it actually goes at attacking the underlying illness, the underlying disease. Just like with any medicine, you can be sick and you can get medicine to cure you, and the medicine might not taste good on the way down, right? But if you swallow it, and then you can get cured. See, the problem is guys like Krugman see that the medicine doesn't taste good, and so they want the Europeans to spit it out to get the bad taste out of their mouth. But if they spit out that medicine, then they're not going to get cured. If they simply swallow the medicine and hold their nose, even though it tastes bad, then they're going to have a sounder economy. But you've got to wait for the payoff. What happens when you don't swallow that bad tasting medicine, when you just shoot yourself up with Novocaine or drugs, which is what the stimulus is, then you don't feel that short-term pain, but the underlying problems get worse. And then eventually when you have to deal with the pain, it's that much more excruciating because you made it worse. See, that's all Krugman wants to do. That's all the Keynesians want to do. They want more of the stimulus that caused the problem, and we'll keep on injecting ourselves with this toxic stuff until we OD on it. Why don't they look at the fact that this is the weakest recovery on record despite the most amount of stimulus ever applied? Instead of coming to the logical conclusion that the stimulus isn't working, they instead conclude that it's just not enough. Not enough? Look at the enormity of the debt that we have accumulated. And think about this. I mentioned earlier in this video blog about the labor force participation rate. It's the lowest it's been since December of 1981. Think back to what was going on in December 1981, right? We had Volcker Reagan was just elected, but we were in the depths of this huge recession. The Fed was slamming on the monetary brakes. Interest rates were up at like 20%. They were trying to rein in the excesses of the 70s and the 60s. Now, we have a labor force participation rate just as low, but it's the opposite extreme as far as monetary policy. The Fed has got the pedal to the metal. We got 0% interest rates. The Fed is monetizing all this debt. And yet we have a labor force participation rate as low as it is. Imagine what's going to happen to this economy when the Fed has to tap on the brakes or slam on the brakes. Then what's going to happen? I mean, we've got the easiest monetary policy ever, yet the employment position is as bleak as it was during the tightest period of monetary policy in U.S. history. Think about that. Think about how bad it's going to get when we eventually have to rein in these excesses. And what if we don't? What if the pain of doing the right thing is now going to be so great because we delayed it for so long that we never do the right thing? Well, then what do we get? Then we get hyperinflation. Right? Then we completely destroy the dollar. And of course, I've always said, despite what some of my critics want to say, who say, oh, Peter Schiff said we had hyperinflation in 2008. I've never said that. I've always said that hyperinflation was a worst case scenario that I would hope we would avoid. Now, I do believe we're going to suffer elevated rates of inflation between now and then. In fact, we already do. The problem is the government doesn't admit that. Oh, get this, though. This is rich. I just read that the government is once again trying to tell us that the CPI is overstating inflation. And they're going to fix it again, just like they did under the Boskin Commission, so that the CPI is lower. I mean, this whole thing is crazy. How dumb do they think we are? But at some point, the rise in prices will be so dramatic that there's no way the government is going to be able to tell us that there's no inflation. But at some point, it's going to be much higher. But if the government does not slam on the monetary brakes, right, as bad as it's going to be when they do that, if they refuse to do that, and instead of hitting the brakes, we go over the edge of this cliff and we have the hyperinflation, that is the worst possible scenario. Unfortunately, we're making a beeline for that worst possible scenario right now. And there's not much time to veer from this course, because the problem is the longer we wait, the less likely we are to do it, because it's that much more difficult. Anyway, this is the topic, again, of my new book that's coming out in the next couple of weeks. You can pre-order it right now on Amazon or Barnes & Noble. Again, that's The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Future. And remember, when I wrote my original crash proof and I predicted this massive collapse, the one that we had in 2008 wasn't it. I did refer to the collapse of 2008. I did talk about the Great Recession that we would have that would result from the bursting of the housing bubble and the havoc that would wreak in the banking sector. But what I said the real danger was the crash that was going to follow that one in response to what the government did about the first crash. In other words, I said our economy would die not from the disease of the housing bubble and the financial crisis, but of the cure. The government cure was going to be more toxic than the disease itself, which of course was a function of previous government cures, and we're precisely where I said we would be when I wrote that first book. So this book deals with this next crash, which is the real one. But more importantly, what I really get into in this book is the solutions. What do we do? Where do we go from here? How do we get out of this mess? What are the policy prescriptions so that once again the economy can return to sustainable economic growth? I mean, the path from here to there is not going to be bump free. But if we do the right thing, we can get to a good destination. Unfortunately, right now, there's no indication that we're even considering doing any of the right things. So don't forget, go and pre-order the book. Amazon, by the way, has voted my book the best business book for May. So let's make sure it's not just the best book, but make sure it's the best-selling book. And hopefully if we sell a lot of copies, then maybe somebody will actually bother to review the book. And if we actually get some reviews, more Americans might actually read it, and the more Americans that read it, the better. Because it's important that Americans know the source of their misery. And it's not the free market, and it's not capitalism, it's government. It's the central bank, it's all those politicians that claim they're here to help us. They are our worst enemy. Take care, everybody.